Hey, Craig Johnson here. Ask the Loan Dude. Wanted to jump in and share a little bit about what's going on in this interest rate environment that we're in today. I am absolutely sure if it's frustrating to me, it's very frustrating to realtor partners, to consumers, just the whole aspect. But there is light at the end of the tunnel. There is. It's just taken a lot longer than what a whole bunch of the people that I call it reading the tea leaves have thought the trend would be. And it's not that they've obviously intentionally tried to make a mistake. It's just that reading this market has been extremely, extremely difficult. So, what you're looking at on the screen there is the mortgage backed security at a interest rate, we use the term coupon rate, of 5.5%. That's the green part there that's circled UMBS, 30-year 5.5%. And that is what a daily look at the market as far as the cost of that money has done since January. And as you can see, we've got in the blue a 200-day moving average, the purple 100-day, black is 50-day, and 25 in that kind of maroonish type, brownish color. So you can see the trend lines there all the way back to January, how obviously they've gotten lower and lower. And as it says in the bottom there, the lower the bar, the higher the rates. And absolutely, we are all feeling that. So the trend line definitely has been in a absolute downward direction. As you can tell, the charts speak that very clearly for sure. We've had moments you can see where we've gotten a little bit of hope. We've had some good data that's come out. Inflation has shown signs of improvement, and then lo and behold, another data point will come out, and it trends back to basically higher inflation. And what you're seeing is inflation is the kryptonite to interest rates. So just like Superman does not like kryptonite, interest rates do not like inflation. It's the same exact thing that we're seeing here trending. And I wanted to circle on the right hand side there, maybe it's to your left, the wholesale cost of that rate. And, unless you do this on a daily basis, it definitely can be very, very confusing. But in simple terms, that's the cost of the money. So, and that's at the wholesale rate, meaning obviously when you go to market and buy any product at a wholesale rate, that is the bottom bare minimum cost of whatever that product is. And in this case, this is a 5.5% coupon slash mortgage rate that the market is selling. And that's the cost in which they are selling that at. So you can see, go to the very, very bottom there on the right hand side, 97.00, meaning that if you go and buy that rate, you're actually going to have to pay 3 percentage points, or 3 points, 3 basis points to be able to get to that rate of 5.5 on that coupon. So that's why we're seeing rates 7, 8% is because of the cost of that money has gone up so exponentially. You can see, go to the very top, right? 103.00. That means the actual market would give the lender back 300 basis points, or 3%, if you will, to keep it really, really simple. So quite a spread, right? That's 6% in a spread of the cost of that money. And if you look at that trend line going all the way across, that money has just gotten more and more expensive as we've gone through this cycle, which has caused interest rates to go up. So that's what is happening. But as I said, there is hope. Inflation does show signs of getting better. We've had 2 better months when it looks at the jobs report. We did get a little pop again in inflation with the core number, the CPI number. So The expectation is that the Federal Reserve will raise rates again in their September meeting. Hopefully that will be the last time. The big trend will happen when we turn this trend line in a positive direction is when the Federal Reserve comes out in their statement and says that they will pause. That's what we're looking for. We're looking for a statement out of the meeting that says we will pause. I don't think we're quite there yet. I think we probably have at least 2 meetings to go before we get in an environment that will give them that opportunity to do that. But once we get that, we're going to definitely get some relief. And you're going to see the cost of that money is going to absolutely get better. Because obviously we get up to even 100 basis points compared to 97. It does not cost 300 basis points to get to that coupon. So we will see that trend in interest rates and they will start to pull back and get lower. Just hang in there. It will happen. We'll keep you up to date, trying to make this really, really simple. I know what it's like to have a million things going on in life, and this is just one of the parts of that that is happening. But we're here to serve you and make sure that you are absolutely on top of what is going on in the market, because it can be very, very confusing. If you have any questions, concerns, please don't hesitate. Reach out. Contact information here. But just in case, phone number is 469-550-1390. Again, 469-550-1390. We will keep you up to speed. Thanks again. Have a great day. Talk soon. Bye-bye.